What's up, everyone? Welcome back to Explain the Charts. Today is November 6th, 2025, and we are doing a deep dive into Amazon, symbol Amazon. We'll cover the explosive news that sent the stock soaring, and then we'll break down the charts to see where it might be headed next. Let's start with the news, because it has been a whirlwind for Amazon lately. The big story is the stellar third-quarter earnings report from late October, which sent shockwaves through the market. Amazon absolutely crushed expectations, with revenue jumping 13% year-over-year to over $180 billion. The real star of the show, however, was Amazon Web Services, or AWS. AWS revenue growth accelerated to an impressive 20%, its fastest pace since 2022, bringing in a massive $33 billion. This single-handedly restored a ton of investor confidence and was the primary catalyst for the stock's massive surge. It wasn't just AWS, though. Ad revenue also climbed a healthy 24%. On top of that, CEO Andy Jassy confirmed 14,000 layoffs to make the company leaner and improve margins, which Wall Street loves to see. Adding fuel to this raging fire, just a few days ago, Amazon inked a monumental $38 billion deal with OpenAI, who will use AWS for their demanding AI workloads. This is seen as a huge validation of Amazon's AI infrastructure and capabilities. It reinforces Amazon's dominance in the cloud and AI space, a narrative the market is heavily rewarding right now. While the company is cutting corporate jobs, they also announced plans to hire 250,000 seasonal workers, showing strength in their core retail business heading into the holidays. This mix of growth and efficiency is a powerful combination. Now, let's see how this news translated to the price action right here on the daily chart. We were trading mostly sideways through October, but then on October 31st, we see this enormous gap up. The stock closed around $222 on October 30th and opened the next trading day above $250. This is a classic earnings-driven breakaway gap, which is a very powerful bullish signal indicating the start of a new major move. Following that initial surge, the OpenAI news helped push the stock even further to a new 52-week high of $258.60 on November 3rd. This demonstrates a clear correlation between positive fundamental news and technical strength. Zooming back out on the daily chart, we can see this recent surge is part of a much larger uptrend that started back in April of this year from a low of around $161. The long-term bullish case for Amazon is incredibly compelling right now. It is centered on the trifecta of accelerating AWS growth, massive investment in the AI arms race, and improved profitability from significant cost-cutting. The OpenAI deal acts as a massive stamp of approval, suggesting that even the world's top AI companies see AWS as a critical partner. This is why we're seeing analysts rush to raise their price targets, with some now as high as $280. The momentum is clearly on the side of the bulls for the foreseeable future. The primary resistance level everyone is watching is that recent high of $258.60. A sustained break and close above this level would signal a continuation of this powerful uptrend. This would open the door to price discovery and new all-time highs. However, no stock goes up in a straight line, so let's switch to the one-hour chart to analyze the short-term picture. After hitting that $258.60 high, the stock has understandably pulled back and is now consolidating. This is normal and even healthy after a nearly 20% surge in just a couple of sessions. This allows the market to digest the gains and prepare for the next leg. The bearish case, or at least a reason for caution right now, revolves around a few things. First, the stock became technically overbought on indicators like the RSI after the surge, so a cooling-off period was expected. Second, there are lingering concerns like legal skirmishes with the FTC and the broader economic pressure from layoffs in the tech sector, which could create headwinds. Any sign of weakness in the broader market could also prompt profit-taking in high flyers like Amazon. The first key support level to watch on this pullback is the top of that earnings gap, right around the $244 mark. Holding this level is critical for the bulls in the short term. Drilling down to the 15-minute chart, We can see the price action even more clearly from the last couple of days. The stock has been trying to find its footing around the psychological $250 level. For short-term traders, this consolidation is the key area to watch. A break above the recent range high around $251 could signal a move back towards the $258 highs. Conversely, a break below the range low near $246 would increase the odds of testing that crucial $244 support level. Notice how volume has been decreasing during this consolidation, which typically suggests a significant move is brewing in one direction or the other. Okay, let's switch back to the daily chart and recap the key levels and potential scenarios for traders and investors. Your make-or-break resistance level is the recent 52-week high of $258.60. Above that, we are in blue sky territory. To the downside, your primary support is the top of the gap at $244. This is a crucial level for the current bullish structure. If that fails, the next major support zone lies around $230 to $235, which was the consolidation area before the breakout. Scenario 1. Bullish consolidation and continuation, which I see as a 70% probability. Given the incredibly strong fundamental news and market momentum, the most likely scenario is that this pullback is a temporary consolidation. I'd expect the stock to build a base above the $244 support before making another attempt at the $258.60 high. A decisive close above $259 would reinforce this bullish outlook and could see the price head towards the $270 to $280 analyst targets in the coming weeks. Scenario 2. Gap fill and deeper correction, which I'd place at a 30% probability. If general market sentiment sours or if the price breaks below $244 with high volume, we could see a move to fill that massive earnings gap. This would take the price down towards the $223 to $235 range, which would represent a significant buying opportunity for long-term bulls if the fundamental story remains intact. This bearish scenario becomes more likely if we see unexpected negative company news or a broad market sell-off. So, to sum up, Amazon is in a powerful uptrend driven by fantastic earnings and a strong AI narrative. The long-term picture looks very bullish, but be prepared for some short-term volatility as the stock digests its recent massive gains. Watch those key levels at $258.60 and $244 very closely, as they will likely dictate the next major move. That's our analysis for Amazon today. Please remember, this is not financial advice, and all information provided in this video is for educational purposes only. Always do your own research and consult with a professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.